Alright guys, here we go, video number 2. In this one we're going to be talking about how you can use our other indicators with the exhaustion indicator to help you utilize and figure out when and how you're going to stay in trades post entry. So let's go ahead and recap on EuroCAD. I'm going to use this pair again. Alright, real quick. For our exhaustion here, mark up your chart. 4 hour, drop down to a 30-minute, enter the trade based on if you're going to be aggressive, moderate, or conservative. You can see when we put the 4-hour exhaustion point on, it wasn't quite ready. So what are we going to do? We're going to wait. We're going to wait until everything is converged again at the top before we make our entry. For this example, let's just say we're going to enter aggressively. So we're going to enter on this candle close here, which is an engulfing candle. So put our entry right there, which is 161421. Just make it green. Okay, then you're going to set your risk size. I like to use a 2% risk in a 10 pip stop loss. So I'm going to go ahead and move my stop loss, or set my stop loss to 10 pips. Make this red. Stop loss is red, or stop profit. All right. Enter the trade. Trade is going to come down. You would enter the trade here if you want to be conservative at this candle, being that it's closed below the small moving average. And then as it's playing out, what you can use is the smaller moving average. You can stay in the trade all the way until it flips green. That'll be one way. Okay, so you can see when it flipped green here on this candle close, this candle right here. Okay, and if you rode it all the way down there, you would have captured approximately 178 pips, give or take a couple pips. But you can use these lines as a trade manager. After you enter the trade, what I like to do is after 15 pips, I like to move my stop loss or my stop profit to break even +1. Okay, that's just what I do. If you'd like to go ahead and lock in your 2% for the day, by all means, go ahead. You have no restrictions on your trading plan, but this is just according to what I like to do. So when it moves about 20 pips or so in my direction that I want it to go, I'll lock in my 2%. So 10 pips is my 2% because I'm risking 2% in a 10 pip stop loss. So for every 10 pips this trade goes in my favor, I get a 2% return on my investment. So that's just a couple of things that I like to do when I'm post trading. I utilize my smaller moving average for a exit, and when it flips green, this is where I would have exited at 175 pips. Simple way of utilizing the smaller moving average. Now, if you want to be more of an aggressive type where you don't mind the drawback, you can actually stay in this trade until the bigger moving average starts to turn green. So when both are green, now you can start to see the market possibly make a bigger retracement, as you can see what it did here. Alright, as it's going down and making its first move, you're looking out for when it's going to start to retrace. And we can identify those retracements by when our indicators go in the green area, which is pointing out that it's going to go back up the other way. And sure enough, they all exhausted at this point, giving you a retracement of, how many pips we got here? 75 pips. But we would have exited at the flip of this small moving average. I like to point out as well that this pink line here is going to be a very valuable line that I like to watch. So when this line is back up in the red, you can almost start to look at the retracement ending. So as you can see what it did here, it tagged the big moving average. Our pink line was in the red, signaling it's ready to go back down. It did. And if you want to get technical, you can even add a fib here. So from the start of the swing, right? This is the start. From swing high to the swing low where it started to retrace, giving us a perfect 38.2 retracement. If you'd like, you can even use this area as an area to get back into the trade if you wish. Watching the pink get up into this area, looking at it's hitting a retracement zone, and being that it's near the bigger moving average, you can have confidence in entering a trade using the criteria from the first video. Alright, so bearish engulfing candle or a candle closed below the small moving average. Set your 10 pip stop loss above as it's moving in your intended direction. Set your take profit or your stop loss to break even +1. Or you can just close out your trade if you're happy with your 10% already. Your 10 pips. And utilize this smaller moving average to stay in the trend. So if you entered the trade again aggressively at this close of a candle, right, bearish engulfing, and you stayed in until the small moving average turned red to green, you would have captured here a total of candle close, so another 90 pips. So real simple, real easy to use. We hope you found this useful. If you folks need any other help or tips or any more questions, please feel free to reach out to any one of our leaders here. With that being said, I'd like to wrap up this video. Thank you folks for joining us, and happy trading. Till the next video, take care, stay blessed.